that nothing in life is worthwhile unless you take risks. Nothing. Nelson Mandela said, "There is no passion to be found playing small and settling for a life that's less than the one you're capable of living."
The most important thing is to differentiate between what's a trading plan is and what's a trading strategy. I cannot believe how many people come to us don't understand the basic difference between a trading plan and a trading strategy. A trading plan is a detailed set of rules that governs every move on your trade. It's an overall plan. The military call it campaign plan. It actually turns your trade into a business. You're not going to go into a business without having a business plan. Where are you going to get your stuff from? Where are you going to buy it? Who's going to, where are you going to buy it from? Who are you going to sell it to? How much a profit margin in every item? What's the risk? What's the expenses? That's a business plan. A trading plan does the same exact thing to you. It shows you how much risk and how much profit you're getting. Does this trade make sense to even get into the trade, or just feelings, emotions? It's your body telling you. Trading plan will tell you straight up in your face, this is gonna risk that much money to make that much profits. So trading plan is a detailed set of rules governing every aspect of how you trade the market. It outlines every trade like a business plan, making the trader consistent in his trading execution and resulting in a consistent profitability while limiting the risk. Trading strategy, on the other side, is only part of a trading plan. Trading strategy only considers the entry and exit criteria. These are merely elements of a trading plan, and traders include more than one trading strategy within an overall trading plan. So where is it most traders, most beginners make a huge mistake by buying all these strategies? Your Facebook is probably flooded with ads about this strategy is going to make you $1 million. You're going to turn $800 into $1 million in 3 days, or all these scams. That's one strategy. A strategy is never going to work unless you have a plan, because what happens is it's going to show you where you enter based on moving average and this and that, all of these things that you've been trying, but it doesn't show you the whole picture. It doesn't tell you what to do next. And a trading plan is going to tell you what to do next and will help you build your own trading plan. Trading plan includes a few elements. So if you look on the right hand side right here, that's a trading plan. If you look at it, we actually have a PDF format of this one. If you need us, please email us daytradingfans@gmail.com and we'll send you a copy of that. And the beauty of this particular plan is actually fillable. So as you're trading, you can actually write, your trade execution things, and we're going to show you how to do that. This way, you actually, log your trade as you go. You don't have to wait at the end of the day. It might go right, it might go wrong. You actually walk it step by step, just like anything else. So a trading plan is a detailed set of rules governing every aspect of how you trade the market. It includes 4 things. The trade parameters right here. Trade parameters is on this side right here on the PDF format. A trade parameters forces you to define your risk, like Mark Douglas says. You have to define your risk. How much are you willing to risk per this trade? And once you put that into the PDF format, how much are you willing to risk per share? And it's going to automatically calculate the number of shares that you cannot exceed for your position. That's number 1. Number 2 is Trade Triggers Playbook. What are you trading? Is it a single bar strategy? Is it a multi-bar strategy, which is right here? Those 2. What are you trading? You have to define. You have to put a name to what are you trading. What made you get into that trade? It's not, Apple is coming out with a new iPhone, so I want to jump in before everybody else. That's not a trading plan. So this particular trading plan is going to force you to define what strategy are you using. And as you go with these strategies, you can actually mark it either with your handwriting or a PDF format where you type it on your computer. You mark, you went into a bullish trigger bar. Or no, you're using a pattern. You're not using a single bar. You're only using a pattern. And a pattern will be considered, for example, tweezers bottoms. This way you want to, use a pattern instead of a single bar. Just to give you a quick differentiation between single bar strategy and a trading plan strategy, a multi-bar pattern strategy. A single bar is usually during the open of the market between 9:30 and 10:15. This is the time where the market is still pricing the stock, still going up and down in a way that unpredictable. So the single bar strategy is best for the first 30 to 45 minutes of the market. A pattern strategy is pretty much between 10:15 and 3:30. This time people are more looking at patterns. The market's already been priced, unless there is a significant news like a Fed Reserve announcement or something like that. Under normal market condition, people will follow the patterns, and therefore it's best for you to follow the patterns as well, because the market have memory. All right. The third part of the trading plan is entry strategy. You decided what you're going to trade. You know how much you're going to risk per trade. You know how much you're going to risk per share. You know how many shares maximum for your trade. How you're going to enter and how you're going to build up that trading position, your position. So right here on the PDF, you're going to see: are you going long or short? Are you going with the trend, counter trend? Are you what's your risk? What's your initial risk? Now, if see, big if here, if the trade is going in your direction, you are entitled to use a build-up strategy. You're not gonna add to a losing trade. If the trade is not going in your direction, you're gonna skip that part. But if the trade is going in your direction, that means you're on the right side of the market, and you can build up your strategy build up your position using the build-up strategy. And we can talk about that later on. Okay? The fourth and most important part that most people fail to execute is exit strategy. Right here. Exit strategy. How are you going to exit your position? Doesn't matter if it's using the 1 minute, the 5 minute, the daily, the monthly. Doesn't matter what time frame you're using. How you're going to enter that position. You're not going to be in it for until you retire. And even if you do an IRA account and 401k and all this stuff, you still have to have a parameter to exit that trade to limit your losses and maximize your profits. In this particular plan, there's about 9 of them or 8 of them, and stop loss, of course, is always here. Okay. At the end of the day, at the end of the trade, the PDF format is going to actually automatically calculate how much you made and how much you lost on that last section right here. And it's going to show you. It's going to scream at your face, this is your trade performance. This is how you did today. That's why a trading plan is very important to actually execute the trade to perfection. So to summarize the importance of a trading plan. You see the trading plan on your right hand side right here. It's a written trading plan. It's a PDF format. It shows you what you need to do and when you need to do it. It turns your trading into real business. It provides clear entry and exit strategies, no emotions, straight up business. It prepares you mentally, and it takes emotion out of the trade. You know you are willing to risk that much money, so therefore you are accepting that before you even get into the trade, and this is the most important part of trading. Builds up your trading discipline. I cannot tell you, most of the people that actually losing money day after day after day are because of the lack of discipline. Trading plan is going to build up that discipline because it's going to show you everything before you even get into the trade. It highlights areas where you need improvement. That's not the trade improvement. That's you, the trader. Where do you need improvement in executing the trading plan? If you move the stop loss, it's going to show you right. It's going to scream at your face. You did something wrong. If it comes to like 2-to-1 profit objective, like here, right here, and you didn't book that profit because you think it's going to go to the moon, and it turns against you and it goes, whoosh, it dumps. It's going to scream at your face. You were able to book profit and you did not. So a trading plan is going to show you that. It forces you to identify how much risk you are willing to take and how much profit potential before you even open your position. How much risk and how much profit. These are the keywords. What if the trade does not have, yes, you feel like something is going to happen, it's going to go up, but you see the trading plan is going to show you a huge resistance on the top of that trade. Would you still take it? And if you take it, I can guarantee you the trading plan is going to show you that you went against, it's going to be a counter trend. And therefore, it was your own fault, your own mistake. All of this stuff, the trading plan at the end of the day is going to scream at you where you made mistakes and how you're going to fix it. Therefore, the next trade, hopefully you're disciplined enough to just take one mistake out of that and execute the trading plan again. And execute the trading plan again until you become, it comes down to like the process of elimination, where you eliminate one mistake after another. And hopefully after a certain amount of time, you will be able to execute that trading plan without any emotions and without any mistakes.